And the reason we're here is because one of the garage tenants said their garage got broken into, and we're coming to see what happened. There you go. Somebody cut or punched a hole through their garage door, probably so they can unlock it and get in there. Ugh. Hey everyone, it's Mark Ferguson with Investor More, and I am showing a recent video of the Ocho, an 8-plex I bought almost a year ago. Has a bunch of garages, and you can kind of see what it looks like now, or this was about a month ago, and we'll show you what it looked like when I bought it. But I'm trying to figure out now if we should keep it or sell it. It's been a cool property. It's been a fun property. It doesn't make a whole lot of money. It does make money, and it has a whole lot of turnover of tenants. And we've had some other issues, as you can just see, and it's had a lot of problems. And this is one reason why I never really invested much into multifamily properties, just because they can be a lot more work, have a lot more issues, a lot more drama. And I feel like I have enough drama in my life, usually with everything else going on. So you can see here, it's got the 8-plex here, and it's fully rented. We planted some trees because people had driven on the yard before, and that caused a whole fiasco. And then it's got 12 garages in the back, 12 storage units as well. No, 16 garages in the back. Sorry, 8 are for the tenants. 8 we rent out separately as 2-car garages. So a lot going on here at this property. Here you can see what it looked like many years ago when it had big trees that were taken down and it sold. That's not when we bought it. When we bought it, it sold for $390 in 2000. This is what it looks like when we bought it for $3.5 million. And you can see we painted, we made some improvements. It looks so much better. And we've increased rents on a number of places. Done quite a bit of work to it. You can see the garages, it did need some work there. So we have improved it. There's some of the garages. Oh look, their trash is overflowing too, just like ours usually is, which we'll talk about here too. And we'll also talk about the laundry, because we have coin-op laundry. So there's a big surprise there in my office many of you won't believe. And then of course we had someone breaking into the property. So lots of different things. We've had to, we haven't had to do any evictions of this property, but we've had tenants who didn't pay rent, who left, had to rent so many units here, just lots of turnover. And we did rent one garage, have some other garages that haven't been paying all the time. So quite a bit of work to own this property. So it's not just about the income and money you're bringing in, but it's about how much it costs to manage it and the work it takes to manage it as well. Now I have a team, my office manages it. It's not a ton of work for me personally, but still it takes resources away from what my team can be doing with other things in different aspects there. So let's take a look at some of the other issues we've had. We tried to get a new dumpster because that other dumpster, every time it was filled too high, they charge us like $150 fee. And that's almost as much or more than it costs per month to have the dumpster. And so we ordered a new dumpster, and then came to find out that someone who, I don't remember, I could be completely wrong. I could have agreed to this, I just don't remember. But we have a 2-year contract with them, and I don't remember that. But it's possible I agreed to it. I don't want to blame anybody, but someone in our office signed for that who doesn't work with us anymore, and it's a $1,600 fee to break their 2-year contract. So we're taking this dumpster back now, who doesn't have any fee to break their contract, and they don't charge you $150. It might be even $200 for an overflow fee either. So waste management can be very, very expensive. And now we're going to check the laundry machines. I had to get a new envelope because I've got the complex laundry and now this laundry. And this building I own with a partner, the complex I own on my own, so I don't want to mix up those two machines. It's dirty, I think. We're supposed to be having people clean in here, but again, I'll double check on that. It's not looking very pretty. We need to get that done ASAP, but we'll see what we have. Oh, that's it. I think it's been a week. I can't remember. A week, maybe a little less. That's a good amount. always tell by the weight more than I can looking at it. We'll count that up and see what we have. So we ended up with about $58 from that week, which was pretty good. We usually get 40 to 60, sometimes 80. And you can see all my quarters there. And I did something that many of you will not believe. That bag is full of quarters. All those bags, because I cleared off my quarter hoarding problem. People kept asking a whole lot of questions every time they came into my office. So I decided it's time to clear it out. I actually have a partner in this building, so I gave him half of them. I took half of them, and we weighed them up to see how much they were. I also counted them roughly in my head based on my weird $7.25 piles I made. I just happened to start with that size of pile and continued, but I think we ended up with something like 63 pounds of quarters, which was about was it $1,200 or $1,300, something like that. And then I had $300 I'd already cashed out in exchange with my stores, the liquor store, the bar. So we made about $1,600 over 10 months or so. And that's the complex money. And so I have a new pile starting up higher for the complex. Don't worry, I'll keep this going. So if we do decide to sell the property, something I look at are other comps, sales in the area. And when you're valuing a multi-family property or a commercial property, in any kind of income property like this, it can be tricky because it's really hard to find a property just like it. When you're selling a single family house, there's usually lots of other single family houses very similar to it. So in this case, you have to try and find the most similar properties you can, and then usually adjust based on the income, other factors, and not just like how many bedrooms or baths it has. So there's so many different factors that come into play. So I just pulled up all the properties that have sold or are for sale in kind of a 10-mile radius since December with at least 6 units. So some of these first ones I'm just going to skip because they are just a mess and need lots of work or are completely different. That's kind of a college rental. Very, very low rents. But anyway, we're going to keep coming to try and get to something closer to what we have. So we kind of talked about the income and how much money it's bringing in. And we can see here, this is the gross income of what these properties are bringing in. Now, it's also important to realize sometimes these are projected numbers and sometimes they're real numbers. So it could be that that's what it's really making, or it could be that's what they're saying it could make if it was performing. So I think that is what that one is actually renting for. And you can get an idea of what the price is, what it sold for based on the rent. And then you have to look at what kind of property it is, where it's located. And whoops, that's mine. It pulled up. That's weird. It did that. And you can see it's kind of a couple houses and then lots of different units, kind of like my complex actually, in the way that's set up. And so there's a lot of different things going on there. And so in general, the actual 8-plex, it's built as an 8-plex, which has garages, is going to be more valuable, more desirable than like a hotel or a bunch of different houses, things that have kind of been changed over the years and not your typical investment property. But this still shows it sold for $1.1 million with an $84,000 gross operating income. And we can keep looking here, and here's another more traditional. This is an 8-plex, and it sold for $1.25 million. But look at these rents, $800 and $950, and we're getting $1,250 per unit plus all of our garages. So again, $84,000 gross operating income versus this money right here. And really, yeah, you should be doing net income if you really want to dive into it, but I like to be lazy when I do these analyses sometimes and just go for gross income. Now, this one is one that's for sale and under contract. That's what active backup means. And it's bringing in $115,000 a year. And then we look through those pictures, and look at how nice it is in here. And I don't know if they did that just to sell this property. They really did one up, or what is happening there. Boy, it says some have been remodeled, some haven't. But then you look at the rent, and their average rent is $1,154. It's lower than what we're getting. And you have to remember, we have garages with ours that go with the units, plus we have all the extra garages. And this one's 1.56, went under contract fairly quickly. And so that's actually a pretty good comp because it's an 8-plex, but doesn't have the garages. And we can keep coming here and see this one is a 12-plex for sale for 1.75, 108,000 gross operating income. So now we're getting closer to where we are, but again, that one's not under contract. So that's, a lot of people make that mistake too. It's like, well, they're asking this much, it must be worth that much. Well, it doesn't tell us much. It tells us it's been for sale for 64 days and not under contract yet. So maybe it's a little bit too high. Maybe it's the market, who knows. Then we have another one. It sold for 1.9 million, and it's a 12-plex as well that has 162,000 of income coming in. And this one, you can see, has way more income based on the sold price. And this is one that sold in 8 days. And I saw this one sell, and it was like, oh man, I kind of wish I would have bought it. But you can see too, the pictures they use aren't very nice. And those are their marketing pictures. So it makes you think what all the rest of the units look like. And we'll kind of read through here and see if it gives us any information. A mix of 1 and 2 bedrooms. New owners can upgrade units and raise rents. Just about every property says that. And then it does not say if these are projected or real rents or not, because if we get our calculator out, let's try something here. We'll do 10 units times 963 equals that, plus 825, plus 825. We get $11,280 a month based on what they're telling us right here. We multiply that by 12, and we get 135,000. So their two numbers don't add up. So that makes me think this one is either projected or wrong, because that's a really high number. Like I said, based on these rents, that's not the right number. If they had, 1250 rents coming in, maybe you get closer. So you've really got to look at these to figure out what's going on. Look at another one here. This is a much newer property. This one is 6 units, but it's a duplex. I think each have garages and more bedrooms. But you can still see the gross operating income, 110. It's under contract for $2 million. But then this one, you kind of have to look at the location, the newer units, what you have here, and say, okay, this one is probably going to be, worth more than mine because of how it's built, the condition, the age. And so if they have the same income, this cap rate's probably going to be lower and worth a little more. So there's so many different things to look at. Can keep going. There's another one very similar to that, but they're asking $3 million for an 8-plex and not under contract. So that's kind of getting out of our zone. And then we have a 44-unit one that sold for $7 million. That's kind of outside our zone as well. We could get an idea of what per unit cost is, cap rate is, things like that. But really, I want to focus on the ones that are much more similar. And this is really not that one. That one was okay. This one gives us an idea, and this one gives us an idea of what the value could be based on rents, condition, location, things like that. And so we can take a look at what ours makes and kind of try and figure out what it might be worth. All right, so if we look at kind of the gross cap rate, all we do, it's very simple here, is we take the gross operating income, or 115,000 about, that's yearly, and divide it by the price or value. And for this one, you get 0.073. If we go to this next one, what's that one? We'll do this one just to see what it is too. So that one's 84,000 divided by 1225. That one's 0.068. We'll go to this one right here. And if we do this real simple one, whoops, divide that by 175. Oh, this one's active, remember, 0.061. So that one's got a way lower cap rate. Lower cap rate means it's actually more valuable. So this one might be priced too high, like I was saying before. And then this one, we don't really know what it was exactly based on the other rents. Remember, that was 132,000. Whoops. If we divide that by 1.9, we get 0.069. That's much more in line than what that one is. So you can see we're kind of right around 0.7, 0.68, 0.73. And to be conservative, I've just been kind of valuing my stuff at 0.75 gross cap rate. So if we go over here, we can see what my property has been making so far, what the rents are right now, and maybe we can increase those rents a little bit, who knows, tweak some stuff before we sell it. But if we get our calculator again and see what these are, Hopefully I don't make any mistakes as I try to go as fast as I possibly can. 8,075, was that right? Hopefully. Within, that's not right, logically, because, let me redo that. There we go, that looks better. 9,200, okay. I was gonna say, if I have 8 units, and they're all rented for above 1,000 a month and some 1,250, I shouldn't get 8,000 something. So that's what the apartments bring in. The garages bring in 150 plus 160 plus 170, 160, 175, 250, 160, 1,395. And that's something we could raise too, because you can see here, we just rented this garage for $250 a month. All the rest are way below 200. So I think we're going to send notice to everybody and say, hey, rents are $200 a month now. You're still below market, but we had to raise rents to meet market value. And then if we did that, we would be times 8. Whoa, what's going on here? 200 times 8 plus the 50, we'd be at 1,650. And just for fun, what's 1,650 minus 1,395? 255 a month times 12. That would add $40,000 of value to the property by doing that. Kind of crazy when you think about the numbers that way. So, and then laundry, have about $160 a month coming in from that. And I'll talk about the laundry here in a second and show you what's going on with that, and some other surprises about the laundry you might not believe. But overall, we have 9,200 plus 1,395 plus 160, which gives us 10,755 times 12, 129,060 per year of current income. And if we divide that by the 0.075, we get it's worth 1.72 million. Now, we also can go, well, let me do it. It won't let me do it. So 1.72, I'm going to write that here. Hopefully that shows up on my screen down there. And then 129.60. If we divide that by 0.07 and go with a 7 cap rate, it's worth 1.843. But like I said, if we get these garages up there, it's worth 1.9, closer to that. If all of these rents, right, if we had all these at 1,250, we'd have another 700 a month coming in times 12. That'd be another 112,000. So we can say that same thing. Hey, there's the potential to raise rents, increase income, increase the value, and at that point it'd be, you know, a $2 million property, close to that if all the garages were where they should be, or even still less than where they could be, and all these apartments were up there higher than where they are. Then that just makes much more sense to sell it when you have stuff stabilized. That's why it makes such a huge difference, and why there's opportunity to buy properties that have low rents, raise rents, increase the value. So we have a few things to think about on if it's worth selling, worth keeping or not. And but that gives kind of an idea of what it's worth, and if we really maximize things, what it could be worth at that point as well. And we paid $1.35 million for it in September of 2021, about 11 months ago, right? So in that range. All right, so as we're leaving, this is an old video of what one of the units looked like inside if you wanted to see that. And this unit has turned over a couple times, and the new tenants just told us they'll be late on rent for their second month. So not starting out good there. And we do take a lot of time screening tenants, making sure they have good credit. They don't have good credit, we get co-signers with good credit. So we could rent these immediately to people with horrible credit. But we take our time, we try and find good tenants, and most of them are good, but once in a while we'll get some interesting ones. This is another unit as well. And we just, you know, when you have apartments like this, you have a lot of turnover, a lot of different things going on. So we'll think about whether we want to sell it, keep it, After a year, we can kind of do the 1031 exchange or sell it and pay lower capital gains taxes. There's some advantages to holding on to properties a little longer. Definitely has lots of equity in it. We have a private money loan on it. It's got kind of a lower interest rate the way we did it. But, if we do sell it, then there's the opportunity to use some of that private money for other deals as well, or exchange into other deals that might be more profitable. And really, I like adding value. So once a property is stabilized and good to go, and this one's close to it, not quite, I lose some of my enthusiasm because there's not as much value we can add on it. And if it's not making a whole ton of money, then I don't know if I want to keep it. Like my strip mall makes a ton of money. It's fantastic where my office is and the grocery store and stuff. And the store does great. But for some of these that don't make quite as much money, I feel like there's a better use of the money if you take it, sell it, put it into a new project, a new value add project where you can create that value. All right. Hope you guys enjoyed the video. Let me know what you think. Love the comments, love the likes, love the shares. Keep those coming. Welcome new subscribers. And we'll be back with many more new videos on our flips, rentals, being an agent, businesses, all that good stuff.